welcome back to Teaching Thursdays. This week we're going to talk about cutting the commissions. And commissions are, whenever you're making an investment, there's always going to be some fee associated with it. So if you're buying a stock, a bond, an option, an ETF, mutual fund, they have fund managers, so they have fees with manager fees and so on and so forth. So there's always going to be fees associated with it. But there are ways that you can actually try to cut down on some of the fees just by the way that you invest or who you invest with. You should definitely consider all options, see what all companies offer, see what plan is best for you in terms of investing schedule. But here are some tips in terms of how to cut some of the fees. So let's use an example. First off, let's say you invest. Let's say you buy something once a week, okay? And let's just use stocks for example. And so to buy a stock, it's roughly $10 a share with some of the well-known companies. So if you're at not $10 a share, it's $10 per transaction. So if you're at $10 to buy a set of shares, one share, whatever it is that you're buying, you're at $10, and let's say you do that once a week. Let's say you buy something once a week. So if you get $10 a week times 52 weeks, you're looking at $520 in just buying commission fees to buy those. That's not including anything that you sold. That's just simply buying. You're looking at $520. So let's go ahead and use another example. Let's say it's the $10, right? So if we have $10, but let's say you do it once a month, and there's 12 months in the year. So instead of doing something every week, you kind of bunch everything together and try to find the best transactions for you that you can cut down those costs and cut down the times you have to buy and sell. So if you do that once a month times 12 months, now you're looking at only $120. So you just cut down your expenses by $400 instead of buying once a week to once a month. Now, of course, everybody's always talking about market timing, when you should buy this, when you should buy that. But a lot of people don't have time to do all those things and to try to focus and look at the stock market every single day. So if you're just looking to just get in some things, hold them for a little bit, or even if you're looking for something relatively short term, then you should look into cutting back. One thing you can also do is quarterly. So if you treat your investing like a business, you can do things quarterly. So if you're buying something at $10, and if you buy something every 3 months, that's going to end up being 4 times a year. So now you're looking at about $40 in terms of fees. Now, this is just a very basic example, but the more so is just kind of how you're looking at things, when you should buy stuff, how often you should buy stuff. The market's always going to go up and down. So you should just kind of look at, okay, when should I get in? Don't try to buy, okay, I'm going to get 2 shares today, and I'm going to get 5 shares tomorrow, and I'm going to get 2 more shares a day after that. Maybe you should just try and get the 15, 20 shares at the one time and save on the commission fee, because once all those cost averaging balance each other out, you're going to end up probably paying the same price for the stock. I mean, of course, unless it's some highly volatile stock that it's going up $10 one day, down 20 the next day. But if you're getting in some of these more well-known companies, it's definitely something to look at in terms of investing. So we talked about the schedule. So next we're going to talk about commission cuts in terms of some companies that are out there. So we have a list of companies. We have Robinhood, we have Loyal3, Drive Wealth, Motif Investing, Betterment, Acorns, and Trade King. There are several platforms out there, and of course this isn't negating some of the more well-known companies like E-Trade, TD Ameritrade, Charles Schwab, Vanguard, because they're definitely well-known companies. They're well-established. They have great resources, education, everything. And a lot of mutual funds are using Fidelity and Vanguard mutual funds in their funds. So you might even be investing in those companies and not even know about it. But if you're kind of just a retail investor looking to do stuff on your own, these are some things that you can also consider when investing. So we talked about the commissions as $10. That's roughly going to be a lot of the more well-known companies. Well, Robinhood has commissions of 0. So every time you buy and sell a stock in Robinhood, it's going to cost you $0. However, they don't really offer penny stocks. They don't have options. They don't have bonds. They don't have mutual funds. So that's just something to consider with Robinhood. So it depends on what it is that you're trying to buy. If you're just solely trying to buy an individual stock, then Robinhood may be the goal for you. Loyal3 is actually great for IPOs. So, when Fitbit had an IPO or Wingstop has an IPO, Loyal3 doesn't get every IPO, but they do get maybe 1 to 2 a month. But they also have other companies on their platform, such as GoDaddy, AMC, Coca-Cola, and you can invest in those companies. And what they do is called batch trading. So they buy shares at the end of the day. However, there's $0 cost to you. So let's say you put in an order on Loyal3 to buy some shares in Coca-Cola for, let's say, $50 a share, and then they actually don't buy until it's like $49.50. Well, you actually got it for 50 cents less than what you expected. Or if it's $51, you paid $1 more. However, you saved on the commission fee. So that's kind of offsetting each other. Drive Wealth is another platform out here. They charge roughly, it's like, I think, $3 per trade. So instead of paying your standard $10, it's not as low as 0, but they have more options. They also have a stop loss option in there where if the stock is, you can set it to where if the stock loses 10%, it'll automatically sell and you don't have to do anything yourself. Motif Investing is another great platform. Motif Investing is kind of more of the mutual fund ETF style, where they allow you to invest to up to 30 stocks within one fund. And all you need is at least $250 to buy the fund. You can either buy motifs that are set up in their platform, or you can build your own motif, and it costs $10 to buy the whole motif. So instead of buying, okay, I'm going to get a few shares of Apple, then I'm going to get a few shares of Coca-Cola, I'm going to get a few shares of Microsoft, I'm going to get a few shares of ExxonMobil, you can go ahead and get all of those in one collective entity called a motif. Now, you won't have necessarily a full share. You might have partial shares depending upon how much money you put in and how you set your allocation in terms of percentages for each entity within the motif. But it's $10 to perform the transaction, it's $10 to sell it. And then if you actually want to sell an individual stock within the motif or add a stock, it's going to be $5. So we got $10 and we got $5. Now, Betterment is one of these known as robo-advisors, where you invest in Betterment and they invest in a scale of ETFs. Their platform is built on ETFs, and these ETFs are either stock or equity ETFs. I know we mentioned the term equity in Verse of the Week with Kendrick Lamar. So equities or bonds, and they have all different types of these bond and equity ETFs. And what you do is, Betterment, they don't charge you any monthly fee as long as you invest at least $100 per month. You can set that up however you want, 25 a week, 50 bi-weekly, $100 once a month, however you want to do it. They charge you an interest rate on your balance, but for the biggest thing is it's $3 if you don't put in at least $100 a month. So let's just be mindful, it's going to be $3 if you don't put in $100 per month. Next up, we have Acorns. Now, Acorns is kind of thinking the keep the change, way to save platform, and they take your spare change and invest it. So if you go out and buy something that's $1.50, they take 50 cents and put in your Acorns account. Once those change transfers get up to $5, it invests the money in your account. You can also add in, $5 every week, $5 every month, $5 every however often you want to do it. You can do that through Acorns. Now, normally Acorns is going to charge you they're going to charge you $1 per month in maintenance fee, as well as they have at the end of the year, they kind of have like an annual percentage rate that they charge you, which Robinhood does as well. You're going to have to check the data to see what that number is. But mostly you need to know that it's $1 per month. However, they recently just rolled out that if you're currently a student with a student email, or if you're under the age of 24, they waive the dollar fee. So every amount of money that you put in there is going to invest in there. You're not going to be charged this dollar fee. Lastly, we have TradeKing. TradeKing is another platform. It's going to be similar, to your E-Trade, TD Ameritrades. And TradeKing actually charges $5 per trade. So whenever you buy or sell, it's going to cost you $5. So when you think about how often what your investing schedule is going to be, as well as some of these platforms out here with the commission cuts, you can actually try to save money on the commissions. Because if you think about it, somebody that's day trading, right? Let's say if they have, let's go ahead and wipe this off. So if you're a day trader, you're going to be making a lot of trades a day. But let's just say that, you make one trade a day. And so you have $10 and you make one trade a day. So you're going to be spending $10 in that one trade, but let's say you buy and you sell in day trading. So really you multiply that by 2. So you're spending $20 a day in the day trading platform on some of these traditional platforms. Now let's multiply that by 100 days, which is about a third of a year. So if you have $20 a day times 100 days, you're going to end up with $2,000 in commission fees. That's $2,000 in just commission fees. Now, of course, there's weekends in the year, so if you take out the weekends, the 100 might be roughly about half of the year. So let's say that's half of the year. So multiply that by 2. Let's say you do day trading and you do it every day. Now you're looking at about 4 grand in terms of commission fees. So if you're day trading, you better know what you're doing and make sure you're making some profit off of it, because $4,000 is going to be coming out in terms of fees. Now, of course, that decreases the amount of money in terms of when you claim on your taxes. So let's say if you buy something for $50, the stock goes up to $100, but you had to pay $10 to get it. Well, you really only made 40 bucks. So you claim the 40 on your taxes. So that's something that you can be mindful of, that you can take the commission fees off in terms of the amount you claim to have a lower tax bracket. However, you're still paying 4 grand in commission fees. So if you're day trading, you might want to look into some of these other platforms that have cheaper fees to cut this down or eliminate it almost completely. So that's just some tips in terms of cutting some of your commissions in order to save you some money. Definitely try to develop a schedule, as well as look at some of the commission cuts out there with some of these well-known companies. We also have a 10 apps in 10 days video on our YouTube page. Make sure to check out the 10 apps in 10 days. We actually go over Robinhood, Loyal3, DriveWealth, Motif, Betterment, and Acorns, as well as a few other apps that are out there. And we give a review of the apps as well as a tutorial before you even buy the app.